You've joined us on Moneycontrol Live. I'm Manisha Gupta and we're talking about gold and silver prices today. More so about gold because there has been such a huge profit taking on to this one. We did see an all-time high, even if briefly, at $2,080 per ounce. But that was when the dollar index was weak. There was this regional banks collapsing, contagion fears coming in within the banking sector, and gold was the flight to safety. That doesn't seem to be the case right now, especially with the debt ceiling deal having gone through. We are looking at much of that premium coming off the prices. So gold is trading below $1,950, below $1,940 an ounce is also where we saw it go. So it has been quite a sharp decline that we've seen in case of the precious metal there. So much so that it's trading at a 2-month lows right now. There also has been a recovery not just in the dollar index but in the US yields as well, and that's weighing onto the markets. Also, initially by the beginning of this month, there was an 80 to a 90% probability that you would not see another rate hike happening in the month of June. Now, the US Fed meeting is on 13th and 14th of June, and ahead of that, we have seen a 60% probability of a 25 basis point rate hike happening, and that's clearly weighing on to the precious metals, various other asset classes also. So metals have been in the negative. We've seen energy prices continue to decline, and even if the other conversation being about that the higher rates will continue for a longer time. So a rate cut is not what the street is anticipating right now. That in turn could actually be positive for gold, because if you are looking at, or if you are working with a scenario where the interest rates will be higher for a longer period of time, that would mean that the growth will slow down in some sense. Again, you will see some money moving back in case of gold. As of now, the expectation is that you could be looking at a support level of around 1920. If that breaks away, then 1880, 1860 are the kind of levels that the banks and chartists are now talking about. The overall longer term directional view is still on the positive side. Markets do believe that until the time 1820 holds on the longer side, which is still $100 away from here, by the way, you could be looking at a stronger bounce back come in for the gold prices. And by the end of this year, whether it's Bank of America, Citi, Goldman Sachs believe that you could be looking at prices higher than 1950, 2050, 2100 also is something that is on cards, is what banks tell us.